Welcome everybody. Thanks for being with us. Today I want to talk about price action. It's really the most simple and straightforward way of looking at the market, regardless of what market you're trading. It works across the board on equities, options, futures, Forex, you name it. But it's something I wanted to share with you. This is really a starting point, or it would be a great starting point for any trader to be able to understand and be able to read a chart bar by bar, candle by candle, depending on what you use. But that's what I want to share with you today. So welcome. I'm Vince Vora. I'm the head trader here at Trading Wins, and I have been trading for 30 years. And over that time period, I've put together several strategies and trading systems that are now used not only by retail traders such as yourself, but also several money managers and hedge funds. Please do remember that trading can be risky, so please don't trade with real money until you are completely comfortable with the system that you are using. Now, in today's presentation, I'd like to start off just talking about what price action is, and then we'll take you to the charts and show you how to read a chart candle by candle or bar by bar, and also talk about those areas of reversals and continuations and how to spot them and how to use those pivot points, and not only that, but to identify and trade with support and resistance, which really is a core piece of technical analysis. And then also share a bit about the difference between tools versus indicators, and I'm going to go through a couple of tools that you can actually use along with price action. And hopefully we'll have time at the end of the presentation to talk about or to answer any and hopefully all of your questions. Can everyone see my screen? I see a couple of people saying their name to see my screen. And can you hear me properly before we move on? I'll assume I'll just keep going, assuming everyone can hear me. If not, please let me know, and we'll move on from there. So what is price action? Really, this is the back and forth movement that you see on a chart for an underlying security. And what we try to do with all this movement is make sense of it and try to identify patterns and identify those swing lows and highs, and identify those areas of support and resistance. Well, with price action, you can do all of it with absolutely no indicators whatsoever. It's really quite simple, and I'm going to share that with you today. Now, whether you use candlesticks or whether you use open, high, low, close bars, it really doesn't matter. You should be able to read a bar or a candlestick exactly the same way. So I'm going to use candlesticks here for this demonstration. And you know, depending on whether you color your candles or not, for a bullish candle, you will either have a white candle or a green candle. And for a bearish candle, it'll either be colored in black or red. But regardless, this is the way you should look at this. And as we go through the presentation, you'll understand how this all comes together. But bear with me, I have about 4 slides, and then we'll get to the chart. So whenever you see a white or a green candle here, what you need to understand is that the open price was at the bottom edge of that body, okay? And it closed at the top edge. And then these peaks, these lines, which we call wicks or tails on these candles, are the absolute low for that time period and the high. So what this really means is we opened up at this level, we came down as low as this point, we traded as high as this point, and then we settled in here at this level at the close. So since the close is higher than the open, that's why the bar would be white or green. It's bullish. In other words, we advanced. Okay? And the opposite is true for the bearish candles. We open at the top edge of the body, we go as high as this point, as low as this point, and we end up settling at the close here, which is lower than the open, and that's why it's colored black or red. We move lower, so it's a bearish candle, and it's very, very simple. It doesn't get any more complicated than that, but as we go through it, you'll see just what an advantage this actually gives you in reading the overall chart. Now there's many different types of candles, and there's different sizes and ranges as well. And what really matters is that you're able to understand who won that battle, because each candle is a tug of war between buyers and sellers. That's the way you should really look at this, as a tug of war, and understand who won that tug of war on that particular candle. Now, if you have a small range candle such as this, you read it the exact same way. In other words, you opened up at the bottom of the body, you went as low as this point, as high as that point, and closed over here. And we did close higher than where we opened, so it is a bullish candle. But when you look at it from a tug of war perspective, there was very little back and forth, okay, very tight range. So it wasn't much of a tug of war. So even though the buyers came out ahead, slightly ahead, it really should be treated as more of a tie than anything. Now, when you get a very long range bar like this, that means there was quite a bit of a tug of war going on back and forth. You still read it the same way. We opened here, we came as low as this point, as high as this point, and settled in over here. But obviously, buyers put a lot more pressure on sellers and were able to advance a lot more. So the longer the range of that candle, the more significant it is, and the more control either the buyers or the sellers had. Okay, so what you see on the right-hand side of this slide, the black candles, you would read the same way, except they're bearish. So this, the small one, yeah, bears won, but slightly. It was more of a tie, as were this one. The bears definitely put a lot more pressure on the buyers, or the bulls here. Okay, now when you don't see any wicks and you see long range candles such as this is even more important. And don't pay attention to the names. I mean, if you're a candlestick student, you might want to pay attention to them, but it really doesn't matter what we call them or what we label them. They mean the exact same thing. In other words, if you look at this from a tug of war perspective, we opened up here at the bottom edge of the body and we closed all the way up here. Now there may have been some back and forth within here, but we opened at the low point and closed at the highs, which means buyers were fully in control here. They were putting pressure on sellers the whole time, all right, and we're able to make a significant move. The opposite is true here, where we opened at the top and closed at the absolute bottom, meaning sellers put a lot of pressure on buyers here, and we're able to drive this lower throughout the whole session. Okay, now you get these types of candles here where you'll have very long wicks, but the bodies are very, very small, and in some cases you don't even have a body. This again tells you there was a lot of back and forth during this tug of war. Now in this case the buyers won out slightly. We opened here, came all the way down here, all the way up here, settled in over here, so the buyers did have a slight advantage. But more than anything, this is the type of candle that you would see at either the top of a trend or the bottom of a retracement. And this is what we would call an indecision type bar. In other words, you may have had a series of green candles here driving the price higher, and then suddenly you see this. The reason why it's called an indecision type bar is because while the buyers were completely in control, you now run into a candle where a lot of selling stepped in, and it was more or less a tie. In other words, sellers are now stepping up to the plate here and matching the buying going on. Okay, the opposite is true here. Now when you get a bar like this, which is known as a doji, there is no body. In other words, you opened and you closed at the exact same level. There was a bit of a tug of war, but not a whole lot. Again, an indecision type candles. These usually help you identify areas of reversals. Okay, so again, if there was a series of green candles here and then you run into this, and especially when you run into multiples of them back to back, it's usually a good indication that there's a reversal about to take place. Okay, so enough with the slides. Let's get to the charts. And let's go through this one by one. We'll go through several examples. Again, it really doesn't matter whether you're dealing with equities, futures, or Forex. It works the exact same way across the board. Now, before I do that, to kind of stack the odds in your favor and give yourself a bit of an advantage when you're trading, it's always best if you trade with a chart that's very predictable, okay? Very easy to read, that is trending nicely in one direction or the other. The odds of you pulling off a profitable trade are much, much higher. So in other words, let's compare a chart like NVIDIA here, and you can see that for the whole year, we're pretty much in a slow, steady grind higher. Just a nice, easy trend. If you look at the candles, they're all more or less the same size, very predictable, very easy to read, as compared to something like MDLZ here that is just a choppy mess. And there's a lot of candles that are very wide range, have some long wicks and tails. It's just all over the place. When you try to pull off a trade on the stock like this, it's much more difficult. Your odds of getting stopped out are much higher. So if you can start off with a watch list and a group of charts that are trending nicely, like NVIDIA, it just makes life so much easier. And look, if you throw on indicators here, this is more or less what your chart is going to look like. Now, I have several systems where I use indicators. There are certain indicators I love to trade with. But it's a real advantage when you can start off and be able to read a chart that has nothing other than the price bars on it. Okay? Once you can read a chart and know exactly who's in control at what point here, adding indicators is just a bonus. Okay? So when we look at something like the Dow, let's look at this recent run here. Now this is since the election happened that this run started here. But let's look at these candles and start reading them one by one. If you look back in here before that election night, we were trading slightly lower. In other words, we had a series of red candles and sellers were in control here. Now suddenly we get this gap up after the election, and if you look at this, we opened at the bottom edge of this bar here. We traded slightly lower, traded all the way up here, and settled near the high. So not only were buyers in control here, but if you look compared to the previous close, buyers were so strong, there's so much buying, it gapped up here. So buyers clearly took over here. Now, if you look at the next candle, what happened? We opened here, traded as low as here, as high as here, and settled down in here. Again, more buyers than sellers. So you always need to ask yourself two questions. A, who won the individual tug of war on that particular candle? But B, who's in control overall? So back in here, we could say sellers were in control. As soon as this happened and we traded above the high of that bar, buyers are now in control. So they're winning the individual tug of wars and they're in control. Let's look at the next bar. We actually opened lower than the previous bar, but buyers quickly stepped in and drove it all the way up here. A much wider range bar. If you look back, whenever you get a long range bar like this, if you look back and try to look at when was the last time we had a bar that wide, well, you can go back almost a full year and it'll be tough to find a bar that wide. So the wider it is in range, the more significant it is. That buyers were definitely putting in a lot of pressure here on the sellers, okay? And you can continue doing this, reading candle by candle. Now let's look at this red one here. Let me ask all of you, who's in control here? First of all, who won this tug of war on this particular bar? Okay? Who won the tug of war? I'd like to hear from all of you. Did buyers win this tug of war or did sellers? Remember, we opened up at the top edge of this body, traded up to here, traded as low as here, but we settled over here, slightly lower. Okay? So what it comes down to is it may look like sellers were in control here and won this tug of war, but we actually closed higher than where we closed on the previous bar. So overall, buyers still won that battle, okay? Because we opened up here, we gapped open, okay? So don't be fooled by the odd red bar here. You have to read it the same way and look and compare it to the previous close and where we closed today. So this actually, although it's red, is still buyers winning that tug of war and still buyers in control overall. The next day, again, buyers in control. Now here's one of those indecision type bars, okay? So when should you worry that this run is coming to an end? Well, an easy way is to look for a close below the low of the previous bar, okay? Throughout a run like this, you'll notice that you're getting higher lows and higher highs, okay? And as long as you continue getting those higher lows on these candles, then the trend is in place. But as soon as you get a close below the previous close, then you could have an issue, and that happens over here. It doesn't happen all the way until here. You see this bar? Close below this low, all right? Does that mean the run is over? Not quite yet. Why? Because you should mark the low of that bar and see if there's follow through. Okay? There wasn't. The next day buyers quickly stepped in. So this was a head fake. Okay? And we continue moving on. And we don't see another close below the previous low until here, till yesterday's bar. But did we follow through? Did we close below that low? No. We're once again today trading higher. So right from the beginning here, the trend is in place. I'm just going to take a quick sip of my water, and I will be right back. All right, great, thank you. So let's look at another one. Let's look at the Russell here recently. Look at this run. Okay, same thing here. You had these lower lows and lower highs in here. Sellers were in control. Buyers were winning the odd battle, but sellers were in control. Suddenly, buyers start stepping up. Now here is where you get a close above a previous high, okay? Because when you're going short, you know that trend is over when you get a close above the previous high and you get follow through. So if we had marked the high of that bar, okay, we got that follow through. And now buyers are in control. And now we start reading the candle by candle. And look, higher low, higher low, higher low, all the way through. It's very easy to remain in a trade. I've coached so many students over the years, and one of the most difficult things, one of the biggest challenges they have is remaining in a trade for the bulk of that move. But when you can read a chart candle by candle, it becomes so clear and so easy. It really does tell a story. Again, who's winning the individual tug of wars here? Buyers. Who's in control overall? Buyers. So until that changes, there's nothing to do here. Now, if you were to buy in here and you're deep into this move and you have a huge profit on, there's nothing stopping you from scaling out of this position. In fact, it's a good idea to do that and move your stop up. But there's no reason to be concerned about this until you see a close below the low of the previous candle like we did here. And then that doesn't mean it's over. It's only over if we see follow through. Now, we see follow through here. So now we start seeing lower highs, lower highs, lower highs, lower highs. Okay? This is in place. And here, that doesn't mean we've changed direction completely. Okay? So I'll talk in a bit about the difference of how you can tell whether it's just a retracement or how it's the start of a new trend, okay? But for now, this is a retracement, and we're pulling back until we see a close above a previous high, okay? And there's follow through. So now we're back and running again. And it's very simple and very easy to read these charts, okay? So how do we know now that this is merely a retracement and not a new trend lower? Well, here's the thing. For you to change direction completely, you not only need a close below that previous low, okay? But you need to confirm a a lower high and a lower low, okay? So that's where the pivots come in, okay? Let's talk a bit about pivots. Whether you're trading stocks, futures, or Forex, nothing goes up or down in a straight line. It's always more or less a pattern like this. You get a move, you get a slight pullback, another move, another pullback, and so on. Okay? So the pivots, the pivot lows are these points here, those turning points. That's a pivot low, that's a pivot low, and that's a pivot low. The pivot highs, on the other hand, are right here. Pivot high, pivot high, pivot high. And how can you spot them? Well, again, it's because you've now closed below this low. Now, when it's confirmed, okay, so here, let's look at this candle right here. We were getting these higher highs, higher highs, higher highs. Now suddenly we had to close below the low here, okay? As soon as we put in that lower low, this becomes that pivot, okay? We change direction from here, and this becomes a pivot. So that's a pivot high, and that's a pivot low. So if you mark these pivots throughout, okay, here, there's one down here, okay? Even like here, you put in a lower low, and then you continue on, okay? So if you were putting a higher low, higher low, higher low, and now you put in a lower low followed by a higher low, then that's a pivot, okay? And you continue on. So what you want to do to confirm that this is not a retracement but a change in trend is you need a lower high and a lower low. So have we breached the lower low? We have not, right? So now let's say this came down below this low, okay, and then pulled up again, but created another pivot below this high pivot. Now you have a lower low and a lower high, and now you know you've changed direction, okay? So until you get that, any pullback like this is nothing more than a slight retracement. Now you can use other tools like a moving average, for example. I like to use the 20-period moving average, and if that moving average is something like this, okay, sloping higher while this is pulling back, that helps you understand that this is just a retracement, a temporary retracement before a continuation of that move. But if you're reading it candle by candle, you don't need moving averages. You don't need any other indicators on your chart at all. Now, why are pivots necessary or important? Not just to tell whether it's a retracement or a change in trend, but also to help you identify, okay? Now, here's the thing. Let's look at a chart here and something very simple that you can do, okay? First of all, let's look at the oil chart, okay? Crude oil. Now, one thing you want to do when you identify pivot points, which are these peaks, these lows and highs, lows and highs. They're very easy to spot, okay? Here's another one. One way to identify support or resistance is just to draw a line, a horizontal line at that level, okay? So look back in here. If we start at the far left, you see this one right down here? Look, if I put a line in here and just extend it across, okay? Every pivot, whether it's a low pivot or a high pivot, is going to become a future level of support or resistance, okay? And you'll notice here that after trading back and forth for a while, this came right back to this level and bounced off it, okay? Now, what you'll find is that over time, you may have several pivots at the same level. And the more pivots you have at the same level, the stronger an area of support or resistance that will be, okay? And if you leave those lines on your chart, you'll be able to spot future areas of support and resistance. And the reason why that's important is, look, let's say we had drawn one at this level here, okay? Now, we pulled back. Let's say we wanted to get into a trade down in here. Well, while we're moving higher, we know when we're about to hit resistance. So if you've got a nice profit and you're at this level and you know you're almost at resistance, you're more likely to at least take some profits off the table and move your stop up, because you know that once it approaches that level, there's a good chance it'll bounce off it and reverse. Okay? Now, if you don't like having a ton of lines on your chart, because if you draw a line at every pivot, right, you're going to get a lot of lines on your chart. If you don't want to do that, then you keep it clear. But when it comes time to looking at your trade, let's say I wanted to go long here for whatever reason, I could quickly look back and draw these lines in at these peaks just to see if I have some resistance overhead or if I have some support behind me, which is very important. You see here, this peak, all right? Let's say I got in long here. I know that if it goes against me right away, look, I have some support here. So it probably won't be a quick flush. It'll probably be a bounce and a move back higher, at least giving me an opportunity to exit my trade at a small loss, okay? So all these tools are very, very important, okay? A very big part of your overall trading. And again, I'm not asking you to switch from trading with whatever system you're using or whatever indicator you like trading with. You don't have to do that. What I'm trying to do is help you understand and read a chart without it. Because when you can read a chart without the indicators, once you put on the indicators, everything is that much clearer to you. Okay? Let's look at another example. Let's look at MAC, for example. And if you go back here and you draw in these peaks, you're drawing the pivots. And now I want you to look at it as more of a zone, okay, than anything. If you look at it as a zone rather than just a straight line, because some of you will want to draw that line at the top of the wick and others at the edge of the body. It really doesn't matter. It's more of a zone, okay? But you see how this one from way back here, look, ended up being an area of resistance more than once on this chart. So it really is important. Now, a couple other tools that you can use if you're just trading with price action alone. Number one is the ATR, the average true range. Now, it's an indicator that you can throw on here, but it goes at the bottom of your chart, okay? And all this does, if you look to the far right here, the bubble, you see how it says 1.41? That means that over the past 14 periods, because this has a default setting of 14, over the past 14 bars, the range from high to low on average has been $1.41 on this particular stock. So knowing the ATR helps you know what sort of movement you can expect from this. And this is more important if you're day trading than it is if you're trading on daily, weekly, or monthly charts. Okay, it's a lot more important for day trading, but it's a handy tool to use along with your price action trading. And the other one is Fibonacci's. Okay, the fibs are fantastic. And look, let's go back to the oil chart and remember this pullback here. Look, all you need to do when you see a pullback like that and a reversal is take your fib retracement tool and identify the most recent high and low, which were here. And the fibs, what the fibs do is they automatically draw in very significant areas of support and resistance. Now, you could still draw in those lines like we had back here, which lined up beautifully with that pivot right in here. Okay, but let me just get rid of that. There we go. This zone, when you're using the Fibonacci retracement tool, what you want to look at is the 38.2%, the 50%, and the 61.8%. But not look at them as individual levels. Look at them as a zone. So if I color that area in, that's your area of support. And when you have a trade that comes in and bounces off that, that's a great area to go long. Again, why you have that support, and usually when it bounces off, it goes to the next level of support or resistance, which is this pivot right here. So not only can you have support behind you and protection, even if it starts to roll over, you know you have a big band of support there, okay? But you can also identify your next target. And if you use the fib extension tool, that is purposely to identify further targets. So you use the same high and low with your fib extension tool. And now here, you want to look at the 100% area as your first target, the 127.2% is your next target, and the 1618 is your third. And you can scale out along the way and trail your stops just below these levels, okay? So, you know, if you started out down here, you hit this target, you take some of your profits, you move your stop here. You move up, hit here, you take some more, move your stop to just below that line, and you continue on. Very, very handy. So, almost out of time now. This is just the basics. There's a lot more to this and a lot more you can do with price action. And to help build on this, we've put together a great pro training session called The Magic of Price Action. And during the session, I'm not only going to build on what I taught you today on how to read it bar by bar, but also give you a couple of different trend line techniques that you can use with this that really help you find some powerful trades and channels. When you talk about trading with price action, trading channels with price action, it's amazing how well they help you identify those breakout areas, and usually those are some of your biggest trades. So we'll cover that in detail as well. Now, I'm going to date myself here, but I've been doing this for 30 years, and when I first started, we didn't have all these fancy charting platforms and all these different drawing tools. We used to actually do this with a pencil and a ruler. I know it sounds crazy to most of you, but we actually did that. Using the open, high, low, close figures, we used to draw in our own bars and read our price action off it. And I'm going to give you a strategy that I learned back then. I call it the pencil ruler method. It's a strategy using line charts that is so simple, yet very, very effective, and believe it or not, works just as well today as it did back then. It works in all types of markets, all instruments, whether it's Forex, futures, stocks, it doesn't matter. It's a great strategy. I'll teach that to you. I'm also going to share with you my money management techniques. And because I know a lot of you still trade with indicators, as I do, as a bonus, I'm going to throw in our Magic of Ichimoku course. The Ichimoku indicator is really good, especially helping you identify trend, and that's a whole separate course we're going to throw in. We're also going to throw in a 30-day membership to our pro service, and we do this really because we don't want to just leave you on your own. Once you take this course, you watch it, it's 2 hours, this training. There's a ton of content, but if you have any questions, we're there to help you. You can email me, or you can join our live market chats, which happen twice a week, every Monday evening and Thursday morning. We just had one this morning. You can come into our room, ask me any trading related question you like, okay? And for those of you who might not have a charting platform, we're also going to throw in 60 days of Metastock Pro for you. It's all for $3, and we're doing this because Investor Inspiration has always been such a great partner of ours. They've had me on so many times, and they've been so great. We wanted to do something special for their members. Just go to tradingwins.com/action. That'll take you to this page, and you can get it by clicking the green banner here at the bottom. Now, I think I have a few minutes left for questions. I'm going to ask our coaching coordinator, Raul, to come in and help me read them off so we can get through as many as possible. Raul?
Vince, thank you. Great course as always. The question that always comes up is, how can you do this for only $3?
Again, this is, this is a core piece of your trading. If you can learn how to read charts candle by candle or bar by bar, it's going to really propel you forward, because once you add on the indicators and so on, you're not relying on them as much. You can really read this inside out. So not only is it something I wanted to share with everyone, but again, this is a special that we wanted to put on for Investor Inspiration. Here we are at the end of another year, and it's been a great year partnering with them, and this is our thank you to all of you.
Mary Beth had asked, are pivot levels another way of saying support and resistance?
Yes, you can, absolutely. They're there to help you identify support and resistance, for sure.
A lot of people trade options. How do you apply this to options trading?
Well, like anything else, what options do is actually help you leverage any strategy by having you risk a smaller amount but potentially make even more profit once you know how to use them. And they're also there to help you protect yourself on that position. And they work, they go hand in hand. It's a great piece to add to this.
Okay, there is a phone number if you'd like to place your order over the phone. It's 1-888-574-2426. You can also send us a message, info@tradingwinds.com. And we'd love to have you join. The course will be delivered to you within the next half hour. You'll get the other course as well. And you'll be busy for the Christmas holidays. It's like a little Christmas.
There's a lot of content in there. Like I said, it's 2 hours, but I encourage you to watch it more than once so you don't miss anything. But I think you're really going to love this pencil and ruler method with line charts. It really does keep trading simple. If any of you lack discipline, and I don't mean that in a negative way, I just know how difficult it is for most traders to remain disciplined and let the charts lead the way. Well, this method with line charts, it simplifies trading so much. It makes it so much easier for you. I think you're going to love it.
Are you amazed with all the technology that's out there, algorithms, high frequency trading? This stuff still works.
Why does it still work? Because more often than not, we, the traders, overcomplicate things. We make trading difficult. It doesn't have to be, and I'll prove it to you in this session. It's really effective.
A lot of the members here trade on different time frames. How does it work?
It works across the board. Whether you're trading on 1 minute charts or you're trading on a monthly time frame, investing more than trading, it really doesn't matter. This is pure technical analysis, and it's as basic as it gets. And so, again, that's why it doesn't matter what time frame, and it doesn't matter whether it's a Forex pair, a futures contract, or a stock. It really doesn't matter.
All right, money management. I noticed that's on point 4. Tell me a little bit
about that. Well, that's the core to anything. I mean, you can put on a trade and have a great strategy that identifies the most perfect entry point and so on. If you don't know how to manage it or what size to put on that trade, how much of your money to invest in each trade and so on, you can get into a lot of trouble. So I wanted to share that with you because those money management rules are going to help protect you and pretty much ensure your success with this.
What else does somebody need to know if they're trading or they're starting their trading with just looking at price action?
It's where you should start. And I always use the story of when I started playing golf, right? I just went out on the course, picked up a set of clubs, and went out and tried to learn by myself. Not only was it frustrating and extremely difficult, but what I did to hurt myself was I built bad habits along the way. Then later on, I decided to take lessons, and it was very difficult to unwind those bad habits and relearn new habits, the right habits. If you're starting with price action, that's step A, and once you learn how to read that correctly, everything else is so much easier for you from that point on. So I encourage you to really learn this stuff.
A lot of people ask how recent and fresh is this content. We recorded this course just about 2 weeks ago.
December 1st, wasn't it?
December 1st.
Yeah, December 1st.
Exactly
so
two Thursdays ago. So the course
right.
content is very fresh, very new. You can watch it as often as you'd like. There's no limit to it. It will be on demand. Will be delivered to you by email. Tradingwinds.com/action, as in price action. But it's what happens to the trading over the holidays?
or
is this year different now with the way the markets are going?
Well, certainly there's a lot more eyes on the market this December than previous ones, for sure.
I know something is happening in January.
Yeah.
Yes, with the U.S.
That's right. I don't think we're going to see much of a slowdown, honestly. I mean, we see a bit of slowdown as we get closer to the Christmas holiday and so on, but as you can tell, we're already halfway through December, and the market's very active and trending very nicely. So there's a lot of opportunity in December as well, but 2017 is going to be very exciting, I think.
How do you look for securities to put on your watch list?
I look for very clean charts, and I look for charts that are trending strongly, one way or the other. I don't really care which way, but if it's a nice, strong, clean trend, the odds are already in your favor. So trading with those types of charts is much, much easier.
And when you're looking at intraday trading, what type of time frames are you looking at?
I most of the time stick to the 15-minute and the hourly, but again, you can go to any time frame with this sort of thing.
Emmanuel asked a question. We've got a minute. I suspect you won't be able to respond to it, but tell me what you think. He says, how do you identify the difference between a pullback or a reversal?
Okay, so again, to confirm a reversal, you need, if you're in an uptrend, you need a lower high and a lower low to be put in place to confirm that reversal, okay? If you don't have both, then until that point, it's just a retracement, okay?
We're almost out of time. I'd like, if you can, sum up the offer one more time
Sure.
and how people can get it.
Sure. So just go to tradingwins.com/action. And what you're going to get in this 2-hour training program is an expanded version of what you saw today. But in addition to that, I'm going to teach you a couple of different trend line techniques that really help you find the best of the best trades. Also, how to find those explosive moves out of channels, those channel breakouts with nothing more than price. Again, no indicators, no nothing. And I'm going to teach you this pencil and ruler method with line charts that I learned 30 years ago that is fantastic. This alone is a reason to pick this up. My money management rules, as a bonus, we'll throw in the Magic of Ichimoku course and 30 days of our pro service, which includes our nightly videos that have all the trades we highlight, along with those live market chats that we have twice a week. Come into our room, ask me any trading related question you like, and 60 days of Metastock Pro just for $3. Again, it's tradingwins.com/action.
You really like teaching, don't you?
I love teaching.
I'll let you thank the folks at Investor Inspiration. They've always been very kind to us.
They have. A big thank you to everyone, Renee and everyone else at Investor Inspiration for having me back on, and a big thank you to all of you for attending today.